In the previous video, we learnt a few concepts relating to profit and loss appropriation account. In this video and the next, we will put into practice what we've learnt in order to understand the concepts better. We will first begin by solving a basic sum on preparation of profit and loss appropriation account. Let's go to the example. Example: A and B are partners in a firm sharing profits in the ratio of 3:2. Their capitals on the 1st of April 2018, for A it's 2 lakh and for B it's 1 lakh. It was agreed between them that interest on capital would be allowed at 6% per annum. In addition, B was to be allowed a salary of rupees 500 per month. A would be given a commission of 10% on turnover. A and B had withdrawn rupees 10,000 and rupees 20,000 respectively, and the interest on this drawing was for A rupees 100 and for B rupees 200. Rupees 6,000 was to be transferred to reserve. We are required to prepare the P&L appropriation account for the year ended 31st March 2019. The information given is the turnover for the year was 1,50,000. This is relevant because of A would be given a commission of 10% on turnover. Also given is that the profits for the year ended 31st March 2019 is rupees 2,50,000. So we'll begin preparing the profit and loss appropriation account. Profit and loss appropriation account. For the year ended 31st March 2019. On either side we have an inner column and an outer column. We'll have to begin by bringing down the net profit by profit and loss account. For the net profit brought down, it's 2,50,000. We have to debit P&L appropriation account with interest on capital to the interest on capital. For A, it's 6% on 2 lakh, which is rupees 12,000, and for B, it's 6% on 1 lakh, which is rupees 6,000. Total 18,000 to the outer column. Two partners' salary. B gets it 500 into 12, which is rupees 6,000. Two partners' commission. A gets it, which is 10% of 150k, which is 15,000. The interest on drawings for A is 100 and for B it's 200. Interest on drawings should be credited to the profit and loss appropriation account by interest on drawings. For A it's rupees 100 and for B it's rupees 200. I take 300 to the outer column. Also, we have that rupees 6,000 should be transferred to reserve. To transfer to reserve. rupees 6,000. I'll remove the split and we can balance the account. So this is the profit and loss appropriation account. Credit side total greater 2,50,300. On totaling the debit side, we get rupees 45,000. The difference, two profits transferred to partners' capital accounts. Capital account should be the default. We'll learn later when we do methods of maintaining capital accounts. So the total difference is 2,50,300 minus 45,000, which is 2,05,300. On going back to the sum, we understand that the profit sharing ratio is 3:2. So the profits have to be distributed in the ratio of 3:2. So working notes, three by 5 for A, which is 1,23,180, and for B it's 41,060 into 2, which is 82,120. So the total of this gives 2,05,300. So we've completed a basic sum on preparation of profit and loss appropriation account. Next, let's go to the concept of charge versus appropriation. To recall what a charge is debited to the profit and loss account and has to be made irrespective of whether the firm earns a profit or incurs a loss. On the other hand, an appropriation is debited to the profit and loss appropriation account and can be made only to the extent of the profits which are available, and in case of loss, no appropriation can be made. So let's go to the example. Example: A and B entered into partnership sharing profits equally. They introduced capitals of rupees 5 lakh and rupees 3 lakh respectively. On 31st October 2018, A advanced rupees 2 lakh by way of loan without any agreement as to the interest. B has also given his garage for firm's use, for which he is to receive a rent of rupees 1,000 per month. Interest on capital is allowed to the partners at 10% per annum. Profit and loss account for the year ended 31st March 2019 showed a profit of rupees 4,30,000 before taking into account all the above items. Prepare all relevant ledger accounts. On scrutinizing the sum, we find that there are two charges here. One is the interest on loan and the other is the rent paid to the partner of 1,000 rupees per month. On the other hand, interest on capital is an appropriation. So we need to debit the charges to the profit and loss account. So in order to prepare all the relevant ledger accounts, we'll start with the profit and loss account. Profit and loss account for the year ended March 2019. It is given that the profit of the firm was 4,30,000 before the above items. So I'll bring down the net profit by profits brought down. 4,30,000. Next, A has advanced 2 lakh by way of loan without any agreement as to interest. Since there is absence of information, the firm will have to give A interest on loan at 6% per annum. The number of months from 31st October 2018 up to 31st March 2019 is 5 months. So for the working of interest on loan, the principal amount, which is 2 lakh into 6 by 100 into 5 by 12. So 2 interest on loan to A, rupees 5,000. Also rent paid to partner B, 2 rent to B, it's 1,000 per month, 1,000 into 12, which is 12,000. We have a balance profit which we need to take over to the P&L appropriation account. I'll balance the profit and loss account. 4,30,000 greater total, 2 profits transferred to profit and loss appropriation account, which is 4,30,000 minus 17,000, which comes to 4,13,000. So this is the profit which is going to be transferred to the profit and loss appropriation account. The next step is to go ahead and prepare the profit and loss appropriation account. Profit and loss appropriation account. For the year ended March 2019. We had a net profit of 4,13,000. Interest on capital is a appropriation, so let's give interest on capital. For A, it's 10% of 5 lakh, which is 50,000, and for B, the amount is 10% on rupees 3 lakh, which amounts to 80,000. No other appropriation to be made. to profits transferred to partners' capital accounts. The difference is 4,13,000 minus 80,000, which is 3,33,000. The profit sharing ratio is given in the sum that it's equal, so we have to divide it by 2. So working notes: A and B each get 3,33,000 into 1 divided by 2, which is equal to 1,66,500. I'll remove the split and we can see the answer. This was the profit and loss account which we prepared, and the profit and loss appropriation account. After bringing down the profit and loss, the profits from the profit and loss account, we have brought it down here. The charges have been debited to the profit and loss account, and the profits have been transferred to the profit and loss appropriation account. Interest on capital is debited, being an appropriation, to the profit and loss appropriation account, and balance profit are divided in the profit sharing ratio, which is equal. So we just understood the difference between charge and appropriation and did an example also. So in the next video we'll continue with the other concepts.